Hello, this is Richard Wilson from the Family Office Club and Wilson Holding Company, and I wanted to come to you today with a quick Monday Mandate update. Today I'm going to talk about strategy of deals we're negotiating right now and our 3 motivations for pursuing them. Because some people say, wow, you're doing a lot, but really it's all focused in my mind and building a funnel. And what we found in the past is that you can be a broker of deals. You can get a 3% fee, a 5% fee, maybe more if you're on the sell side or dealing with small deals. But the better position to be in long term, if you can, is find 1 or 2 areas where you can really specialize so that after a deal closes, you can still be part of it and add value. You could be on the equity cap table, you could get a performance fee, you could get an upside on growth in EBITDA or growth on the sales price of an asset adjusted by inflation or industry growth. And what I'm saying is that it's better to long term find areas you can specialize in. Also, we've been frustrated by clients that even if they're paying us $7,000 a month to look at access of some of our off-market deal flow, they still might not close on deals for 50 different reasons. But one of the 50 reasons, as a business owner, you got to take responsibility, would be, high conviction that it's an excellent deal. And I feel like the more we can specialize as a team, the more that we can make them have a high conviction through our confidence in the deal. So that's something that we've been focused on lately, is trying to identify that. And one area we've found is US-based operating businesses, specifically consumer products, whether it's beauty products and things that you would buy at a retail store, is an area of interest to many families. Could include a food type product. And so, as you probably heard on one of our other updates, we closed our first deal in that area. We actually invested from the Family Office Club as a principal investor after our family office turned down the investment. And we bought 33% equity in a business. We get 12.5% gross revenue royalty each month. And now we are negotiating with 3 to 4 other companies. One we're trying to get a 10% equity stake in. It's in a parallel niche. Another one we are trying to grow a relationship with. I know someone who works at a publicly traded consumer products company that buys a lot of smaller companies. And they had one of their clients reach out to them, a big retail establishment, saying, do you have anybody that could produce for us in short notice this product? And that product is something that one of these potential investment targets is actually producing, and that's all they do is produce that product. And when I heard that through my contact, I said, well, I could make a connection there and make an introduction. So we have them connected now to the publicly traded company. But what I did before making the connection was make sure that we had an agreement with that company we're trying to get an investment in through a family office or ourselves, that any business done through this publicly traded company or contacts derived from that relationship would get a 7% gross revenue royalty from it. And I wanted to do that to show them, we know this is big value and this could lead to 50% of your total business revenue at some point if this really goes big. And I also told them just to wear my motivation on the sleeve. My motivation to do this introduction is to earn your respect and trust of being on your cap table, at a 10% equity stake one time. And, if this goes as I hope it does, I'd like to reinvest that 7% gross revenue royalty back into your business to earn that 10% spot on your cap table. And I wanted to share that because it's just a way I'm trying to build credibility in the space. It builds credibility that we already closed one deal. I can use that now on 2 sides of the table with the family offices and the company CEOs. But now negotiating these 2 other 10% equity stakes each, or maybe larger, as families invest alongside me with the same terms or very similar terms, then that's going to be a way to grow our holdings and our ability to close off-market deals that we're sourcing for our families. And really what we're trying to do long term is build a platform-focused strategy so that the more we learn on how to ramp up and grow these operating businesses in a consumer product space, the more that we can show exciting deals and have a plan for growing them post-close, whether we're managing that company or helping manage it, or whether it's being ran and managed by somebody else. And the thing I wanted to be absolutely clear on is the triple ROI that we're getting with this strategy, and I think that's what makes me so motivated to do it. One, it helps us get more deals done because we are learning by being equity holders in the space. So we're better at getting valuations done, due diligence done, getting things to closing, having more credibility. And it just basically gives us another operating business in our Wilson Holding Company portfolio as well. So the first benefit is just having another asset that's growing in equity value and spinning off cash each month. The second benefit is we have more credibility from the family office's point of view because we have a holding in the industry and we know what we're doing and we can point to it and what we're doing to grow it and manage it, and all the systems that we've developed, like the 5 hours we took off of the manufacturing time of our consumer product this week by developing a new process. So that's the second benefit, credibility from the family office's perspective for deals in the area. And the third benefit is credibility from the CEO's eyes, from the consumer product companies' CEOs that we negotiate with on off-market deals. Everything moves faster when they know we're already in the space, we've invested in the space, we're growing in the space, and we're excited to be part of their team in a small or big way to help them really take their company to $10 million or $100 million a year. So those are the three big benefits: the family office credibility, CEO credibility of the target investment companies, and then just us having another operating asset within our portfolio, as well as obviously direct benefit. So that's what I wanted to cover today, is just strategy on the portfolio we're building. It's a little bit risky, sharing this publicly, because one, we're kind of giving away what we're doing. But two, if it doesn't work out, it's a little bit of egg on our face talking about it. And then if it all disappears, or if our first investment goes to zero, then obviously that's a slightly embarrassing thing, or something that didn't go well that I talked about publicly. But I think it's really fun to share these types of ideas with $100 million net worth plus families. And I found the more we reveal our actual strategies, the more we have high quality clients attracted to us that think like us and want our type of help as business professionals, more so than just traditional Wall Street bankers, to help their single family office grow their platform holdings. So this is Richard Wilson from the Family Office Club. Thanks for listening. We'll see you on the next Monday Mandate Update.